This is Scott Becker with the Becker Private Equity and Business Podcast. The question of the day is, what does the debt ceiling mean for the average American? What would a debt deal mean for the average American? The second question, what would a debt deal mean for the average American, is the easier question to answer. A debt ceiling deal probably means the slowing of government spending. And that is very good in the long run and very important for cutting inflation. Every $1 trillion in deficit probably leads to 3 or 4 points of inflation, and you really can't get inflation under control if you do deficit spending. But even more so, unless you just ramp up the interest rates so high to put so much pressure on everybody. So what a debt ceiling would mean for the average American is slower inflation, but less money going around, probably a little bit softening of the stock market, interest rates probably also starting to soften, but ultimately in the long run, getting us to a better normal, a better place. The country's run up so much debt over the last few years that getting it under control is going to be a little bit painful because we're living with the largesse that comes from that government spending, and at the same time, we know that it's not sustainable. So what a debt ceiling deal looks like is some slowdown in growth, maybe a recession, some slowdown in inflation, but also a slowing down probably in government interest rate hikes. So you've got a number of things that go with it. One of the reasons why President Biden is so scared to do a debt deal is he's very afraid of the slowdown in growth, the slowdown in the economy, and what that does to the election in 2024. So that's what a debt deal looks like: some cutting of spending, and some probably recession and some negativity medicine that the country probably needs to take. And what that means is a recession means some job loss. It means lower inflation. It means lots of different problems to go with getting the deficit under control. So that's what it does. A deal, a world without a debt deal is very hard to envision because at some point we've got to pay our debt as a country, and that's an absolute debacle if we don't. The last time the country got to this spot, its debt was downgraded a little bit by Moody's, and we'll see if that happens as well. And at what point does the U.S. figure this out and start to pay its debts again, and so forth? At some point, probably tremendous pressure on the Republicans to crumble, or the White House to give in someplace. Both sides seem to be having a challenge with that as well. At the end of the day, I think both sides probably understand deeply that we've got to get the debt under control, but it's a hard thing to do. Thank you for listening to the Becker Private Equity and Business Podcast, and thank you for the question.